would like to welcome you all to the Restaurants Brand Asia Q3 FY24 earnings conference call. From the management today, we have Mr. Rajiv Varman, CEO, Whole-Time Director, Mr. Sandeep Dev, Brand President, Indonesia, Mr. Sumit Javeri, Chief Financial Officer, Mr. Kapil Grover, Chief Marketing Officer, and Mr. Prashant Desai, Head of Strategy and Investor Relations. I would now hand over the call to the management for the opening remarks. Over to you, sir.
Yeah, good evening, guys. This is Raj. Thank you for joining the call this evening. Just to give you a rundown, we reported 3.6% positive same-store sales in Q1, and then 3.5 in the last quarter in Q2. And we continue that positive trend again today. We are going to report 2.6% positive in same-store sales. The good thing about this is we are driving this positive sales by driving traffic into our restaurants. So we continue to maintain between a 6.5-7% kind of a positive traffic into our restaurant. That is the that is the effort that we wanted to put this year, which is to drive more people into our restaurants, especially into a dine-in business. And we continue to do that, and we have not missed a beat on that. So that's the great good news. The market at large is a value market right now, and we have, and Kapil will walk you through the promotion that we are doing, which is now national all across the country. And it's doing very well for us and continues to drive traffic into our restaurants. So that's the opening remarks on how we are as faring in Q3 as we did in Q2 and Q1. So the sales revenues were 445 crores, grew 20% year over year, same quarter, and 23% up if you take the 9 months that we have operated in this year. SSSG, as I said, was 2.6% positive, and I'm talking about only the Indian numbers right now, driven primarily through traffic. So traffic was up quite a bit. So thanks to all the effort by the operations and the marketing team, they continue to drive more people into the business. Again, some very good profitability numbers thanks to all the work that we have done in the last year and now into this year. The highest ever company EBITDA. I'll give you post-INS numbers, and then I'll give you pre. So INR 70 crores was delivered in Q3, which is 48% up year over year. And if you take pre-Ind AS, we delivered 30 crores. Again, that's double what we delivered last year, same quarter. So very good profitability numbers. Last semester, last quarter, I told you that the entire company continues to be focused on unit level economics. That is not going to change. We will continue to work on those. And then now we are seeing the results of that. PBT, again, this is the second quarter we are break even for a brand new company that's hardly 8-9 years into operations. We have started breaking even on PBT, so that's again two quarters in a row. We built 38 restaurants this quarter, bringing us to 441 restaurants. And as we sit today, we are actually crossed our target for this year, as we had set it up at 450 for the fiscal year. We are at 452 restaurants as we sit today. So congratulations to Cicely Thomas, her team, and the entire construction projects team that they've pulled this target ahead, 3 months ahead of where we were. And then, the cafes, we continue to build cafes, as you know, and today we have 334 Burger King cafes as of December 31st. Now, the digital exercise that Kapil and Cicely both are running across our business. Today they have built 68 restaurants, or they have 68 restaurants that are on the King's Journey. Again, reminding you of King's Journey, obviously Kapil will kind of give you the details of it, but really this is about the kiosks, about table ordering, about the app, ease to order, the entire experience where customers actually go and place the order on the kiosk or on their mobile app. or on a QR code scanned and go into the website, place order there, and the food actually comes to their table. That's the King's Journey kind of a thing, which is doing so well globally and here as well in India. We moved to 68 restaurants doing that, and next year we will complete the 100% of the restaurants on King's Journey. Now, a little bit over Indonesia. Again, Sandeep Dey is on the line. Sandeep Dey runs our business in Indonesia, both Popeyes and Burger King. And Sandeep will give a detailed update on Indonesia, while Sumit will kind of give you the overall financial of both the countries. Kapil will walk you through the India marketing strategy that we are so proud that we are moving in the right direction. So Indonesian numbers. Now, one of the things that I don't know if you're following the Indonesian market, there's been some geopolitical forces once this war started in Israel versus the Hamas. There's some anti-sentiments in Indonesia towards the U.S. brands. That's kind of easing off a little bit, but it has taken a significant toll in the last couple of months, predominantly while customers are trying to stay away from the U.S. brands. Again, like I said, it's starting to ease, and we're hoping that this will eradicate over time period. So anyway, Q3, the ADS was 17.8 million. Again, I'm giving you IDR numbers here. This was a lower than 18 million IDR, which was the previous year, same quarter, down about 1% year over year. Now, however, the good news of here is Sandeep put together a fantastic strategy a few months back with the help of the same program that we have here in India. We put the strategy up in Indonesia, and the quarter-on-quarter growth on delivery sales. Again, we are aligning the business so that we start doing business. We used to do 50, 60 transactions. We have moved that to north of 100 transactions on delivery, and we continue to push that. That has been the saving grace because brands have seen a significant toll on traffic going into their restaurants as an industry, right? But our saving grace is we have now started driving traffic into our delivery business. So some good news there as we kind of wait for the market to recover as a whole. ADS IDR on Popeyes, which is a business today with 25 restaurants open as of December 31st. That was at 23.3 million IDR. Revenues in the Popeyes business, 35 billion versus 27 billion IDR in the previous quarter, grew about 28%. So some good news on the Popeyes end. We continue to build that business and a very strong economic business over there. Profitability, restaurant level EBITDA, this was a break even for us in Q3. And this was driven predominantly by cost optimization. A lot of work going in that direction. It's not complete. We have another 2 quarters of work to do in completely cost optimizing our economic model there, but significant improvement in that as well. We have 162 restaurants, Burger King restaurants in Indonesia and 25 Popeyes restaurants in Indonesia. We added 13 new Popeyes restaurants this semester last quarter. Again, the strategy in marketing both markets continues to be driven through value and to bring in traffic and to grow traffic business. So we continue with that traffic over there as well, and you will find that Sandeep will talk more towards that. So with just those highlights, and I'm obviously here for the rest of the call to answer questions and so forth, I will turn it over to Sumit Zaveri to kind of walk you through the numbers as we see it. Over to you.
Thank you, Raj. I'll just quickly take you through our performance for the quarter and 9 months. Starting quickly with India, how we performed, Indonesia on the consolidated basis. At the back of we closing December at 441 stores, 452 as we speak today, and continue to show positive SSG. on an average of around slightly upwards of around 3%. We delivered a revenue of 445 crores, a growth of 20% over last year. It is literally at the back of SSG and the new store opening that we've been able to achieve 20% growth. We've always been talking about taking our gross margins forward and continue to kind of work towards that. We had set our targets, and we will look at that later as well. We've always been saying that we want to get to the number of 67%. We've got to 67.1 for the quarter FY24, and we strongly believe that we should be able to hold on to this as we go along. So a very clear shift that we've been able to achieve this year over last 3 quarters, and a strong shift is what we strongly believe we've been able to get to. As far as store EBITDA is concerned, we delivered 12.2% for the quarter, and if you really look at it from the perspective of 9 months as well, for 9 months we are now on early double digits at 10.3% for the quarter as far as restaurant EBITDA on a pre-Ind AS basis is concerned. As far as company EBITDA is concerned, we're continuing our journey to show improvement quarter on quarter. This quarter we've got to a company EBITDA on a pre-Ind AS basis of 30 crores, 6.8%. And if you look at it on a 9-month basis, almost close to 5% at 65 crores on an India basis. So we feel very strong about where we stand on India as far as our performance for the quarter and 9 months is concerned. Raj did mention about some of the headwinds that we faced in Indonesia. In view of that, our revenue for quarter 3 stood at 158 crores, in line with what we had achieved last year at quarter 3. The only difference is last year we were close to 180 stores, whereas this we achieved with around 162 stores. So lesser number of stores, but achieved very similar revenues. The issue impacted us in November. So November and December is where we literally got it was fairly muted. Our target was to at least ensure that we continue to improve our performance at the restaurant levels. And as you could see, with difficult situations as well, we've been able to at least get to break even at a company EBITDA level, which if you look at it, last year, same quarter, we were negative 18 crores at a reported company EBITDA level. And company EBITDA pre-Ind AS level as well, from a negative 28, we've been able to move the needle to negative 13. So there is progress, but yes, we really wanted to move farther than what we've moved in this quarter or this 9 months as far as Indonesia is concerned. If we're looking at consolidated operating performance, revenue for the quarter stood at 604 crores. At a consolidated company EBITDA level, 17.2 crores, 2.8% company level EBITDA, which was minus 13 crores last year. So again, 30 crore shift as compared to last year. And similarly, if you look at 9 months FY24, 1,840 crores revenue as compared to 540 crores, which is 20% growth, with 25 crores of company EBITDA, 1.3% as compared to a negative 2.5% that we had. So overall, we have very clearly shown improvement in India as well as in Indonesia. And our journey would be a very strong focus on profitability in addition to driving revenue at the top line is what we will continue our journey going forward. So that's actually how we're going to focus. Sandeep will take us through some of the trends in the Indonesia side, but before that, handing it over to Kapil to take us through some of the initiatives that we did on the marketing side that helped us to our performance in quarter 3. Over to you, Kapil.
Well, thanks, Sumit, and good evening, everyone. As always, we'll just remind ourselves of the focus areas that the team is working on, and then update everyone on the progress. Number 1 being the value strategy as a key driver of growth and traffic to our stores. In innovation on core burger platforms, last quarter we also added a new popular chicken side, improved some of the existing products to improve the adoption of these ideas. And we'll share more details on that. The third focus area is building the digital experience for our consumers in our stores and synchronizing all touch points for a seamless experience for our consumers. Last but not the least, building a very strong, engaging brand for the Gen Z and millennials. Now on slide number 12. Our value proposition is focused on satiating meals platform. Tasty meals at 99. We spoke about it last couple of quarters. We consistently built this platform over the last 9 months, and we continue to focus on this. The campaign has helped us sustain dine-in traffic growth despite seasonality impact of, whether there was Shraddh Navratri in October or there's some headwinds. Whatever there is, we've been able to sustain traffic growth, as Raj mentioned in his opening remarks, on the back of this campaign, especially towards dine-in restaurants. And this will continue to be our focus area as we go forward. The next layer I want to talk about is the Whopper. Last quarter, we came up with a new campaign on the Whopper also, which was to sustain that platform. And it's not an idea for a quarter, it's an idea for many quarters to come. The insight behind this campaign was, based on the feedback we heard from our guests, that they want the taste of the Whopper to be more closer to their Indian palate expectations. And we had made that change in the product a couple of years ago, but we could not communicate it because of COVID disruptions and other priorities. This quarter, we crafted a new insightful campaign. It was a multilingual campaign which was shot in 3 different languages with a unique cast to make a much deeper connect with our guests. Now, just to give you a little anecdote, the protagonist here is a fence sitter, someone who's not sure, and then a Whopper fan urges her to try the Whopper, and then they discover the fantastic taste of the product and they get converted. So this idea is deeply rooted in our deep cultural insight, and we will continue to use this over long term to build the Whopper trials and Whopper love. Slide number 14 is about how we continue to build BK Cafe as a concept and generate trials. We continue to promote on social media. We continue to promote through influencers and drive trials of that program. On the innovation side, I spoke about the popular chicken snack that we've added. We've launched crunchy nuggets. It's nuggets with a twist. Typically what you get in the category as tempura coated soft nuggets. But we understand that the Indian consumer loves multi-textural snacking, and we built this product out based on that insight. It's got a crunchy texture and a very juicy, flavorful chicken inside, and we're getting very good response. And it's early days, but already hearing good response from our consumers, and it will help us build the chicken snacking portfolio over time. We also relaunched the BK Chicken Burger with 50% more chicken in the same price, and this will now offer consumers even better value for money in our classic burger range. The second product is the premium wraps. Now this premium, very soft paneer wrap and the 5 chicken wrap is available nationally across our stores. These premium wraps have been launched at a price point of $199. So now the King's Collection menu, as we've been talking about the last 4 quarters, is now consistent of 4 burgers and 2 wraps at the same price point, and consumers can pick any of those items, to their taste and likability at that price point of $199. The third product relaunch was the new improved softer and fluffier muffins. Now these are now available across all our cafes, and we are already seeing improvement in uptake as we build the cafe layer in 334 stores across the country. Right? Now I'll move to slide number 16. The Burger King social feed continues to drive engaging content. We are always having a conversation with our guests on trending moments, on festivals like Diwali, Halloween, movie releases, and we stay connected with a loyal BK fan base through our social media handles. Last but not the least, and Raj mentioned in his open comments, is the update on King's Journey rollout. Now this King's Journey rollout that the platform that we've created, is a platform where our guests are offered fantastic experience through digital ordering, app-based ordering, from the table without queuing up at the counter and then getting their food served at the table. Now this will significantly improve our customer service and our customer experience at our stores. As we speak, we have 68 stores that offer kiosk ordering to our guests, and we have a very good adoption of the same with almost 32% of the orders being placed using the kiosk interface. The BK app continues to grow with exclusive offers, and we have seen significant growth in orders and users on the BK app in the last quarter. And finally, table service. The initiative has been rolled out across 244 stores, and it continues to expand every week. As I mentioned, this should significantly help us further improve our guest experience over time. So that's from my side. I will now hand over to Sandeep to share an update on the Indonesia business.
Thank you, Kapil, and very good evening to all of you once again. The last quarter has been quite challenging for us. End of October onwards, The entire industry kind of witnessed a major setback due to the geopolitical crisis, which Raj was mentioning in the beginning of the call. Of course, our business also suffered and sales started to decline since then. We were delivering a very strong performance for the first 2 quarters. Even in the month of October, we were 17% higher in sales compared to the same period last year, which is when, unfortunately, this crisis hit us and our dine-in business got massively impacted by more than almost 32%. However, as Raj was mentioning, we quickly pivoted our strategy to drive sales through delivery channel and compensated a large part of the dine-in drop through a very strong performance on the delivery side. The entire operation team also did a fantastic job in tightening all the controllable cost lines and thereby making sure that we break even at a store level despite such a significant drop in sales. Now, before I move forward, let me quickly recap what are our 3 strategic pillars for the Burger King business. First, continue to build credibility in chicken. Second, establish and retain our leadership in burgers. And third, building a comprehensive dessert menu and drive incremental locations through that. And most importantly, the bedrock for all the strategies are having a very solid ops excellence and continue to provide a very strong value proposition to our guests across the menu layers and across all channels. Now, the next few minutes, I'm going to share with you some of the work we have done to move forward these strategic pillars. See, Indonesia is a very strong fried chicken market, and having a winning product is a key motivator in this category. Last time in our previous call, I spoke about launching 2 variants of chicken, the regular crispy and the spicy variant, at aggressively trial price of 25,000 for a meal, which in the Indian context is approximately 135 rupees for a piece of chicken, rice, and a drink. And we also supported that launch with a comprehensive 360-degree marketing campaign. The results were quite positive. The incidence of chicken improved by more than 20%, volume grew by more than 50%. In fact, it's been now 3 quarters and we are seeing a sustained results, and this has become a part of our everyday value offer. I'm now moving to the next slide, which is slide number 22. The next strategic priority is to establish the burger leadership, and we continue to focus on 2-pronged strategy here. First is the value LTO strategy. This is where we offer some of our flagship and preferred products at extremely aggressive price of 17,000. It is continuing to drive trials, continuing to drive frequency and delivering sustained results, and also helping us building the Whopper equity. The second part of the strategy is where we continue to provide new excitement through taste innovation and branded collaboration. Last quarter, we partnered with Heinz and launched a Mexican Whopper. And this month, as we speak, as a part of our LTO strategy, we launched a new variant which is inspired by a local favorite called Cheese Dunk Whopper. Now, as a part of the dessert strategy, which is the 3rd pillar, we continue to drive innovation every quarter. Last quarter, our collaboration was with Ferrero and launched a Nutella fusion. And that is also witnessing a sustained volume growth of almost 2.5 times. Now I'm on slide number 24. On the delivery side of the business, which is what both Raj and Sumit was mentioning, we picked up some of the best practices from India and crafted a single price menu. This has a collection of bunch of products, about 18-20 products, preferred by our guests at a very attractive pricing. And we also increased our visibility in the platform. So this combination of attractively designed single price menu and an increased visibility is driving significant growth. As Raj was mentioning, our traffic in the delivery channels has increased by almost 40%. And we will continue to drive this strategy as this is going to give us a steady and a sustainable growth. Now let me quickly give an update on the Popeyes side of the business. This quarter we opened 13 stores and we are now a 25-store business. As a part of our asset strategy, most of the growth has been SSGT-led. So out of 25, 21 is freestanding drive-through. Now that we have 25 stores and operation is getting stabilized, our single-minded focus is to build awareness of our products and generate trials. And we are doing that by using the digital menu board as an ad board. And we are building product awareness through various video assets. In fact, every store has a video wall which runs brand videos and product videos. Other than building the product awareness, we are also generating trials through entry price value, generating trials through digitized coupons, and also a single price menu strategy on the delivery side. We are building this brand with a digital first experience, and I mentioned in our previous calls that every single restaurant has kiosks, and our ambition is to have 100% known diners. And we have made a significant progress in that journey. In quarter 1, 37% of our dine-in sales was through kiosk, which increased to 70%. And by the end of quarter 3, it has gone up to 90%. This is definitely going to help us in driving a very strong CRM program in the times to come. Now, that is from the Indonesia side, and now I hand it over to Prashant to share the overall outlook for the business.
Thanks, Sandeep. So guys, no major change if you would look from a FY24 guidance perspective. As far as the number of stores were concerned, Raj mentioned we've already delivered our entire FY24 guidance in January itself. On the same store side, given the headwinds that the industry is facing, we still continue to believe that Burger King will deliver a positive same-store growth. We expect 3% positive same-store growth for the current year. As Sumit mentioned, we've already delivered on our promise of a 67% gross margin, so that's also one thing that we've been able to deliver. On the Indonesia business, we were hoping to break even by March of this next coming month, March 24, the Indonesia business, but given the challenges that Sandeep mentioned extensively at the geopolitical front, we've had to take a little bit of a setback there, and we are pushing the Indonesia business cash break-even from this year now to next year. Our long-term guidance continues to remain where it is from an FY27 standpoint, no change there. So that's from the outlook side. I guess with this, we'll open up the floor for questions. Happy to take any questions that you would have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets only while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nihal Mahesh Jham from Nuvama. Please go ahead.
Yes, thank you so much and good evening to the management. So my first question was on the India business. Just looking at our employee and OPEX spend, despite the aggressive store addition, I see that it's remained flat or even seen a slight moderation versus the last quarter. So just some feedback on, what led to this kind of a movement in these two line items.
Sure. So Nihal, thank you for the question. We've been very tightly monitoring. We've been very tightly monitoring our costs at the store level. And as I mentioned when I was talking, our focus in addition to improving the overall revenue is going to be how do we constantly get better with our flow-through at the store level. And that is something why we've been able to maintain the overall costs at the employee-related expenses at the store level within a very tight range in spite of some more store openings that we've done during the quarter. And that is something which philosophically we will continue to be in that zone where we'll tightly control the middle of the P&L so that we can see the improvement at the store restaurant EBITDA level as well as we go.
Understood. And on the OPEX side, any adjustment to the marketing spend? So, because I know in the first few quarters there was an accelerated
So
spend.
that part, if I may refer to page 6 or slide 6, our commitment has always been that we will spend around 5% on an annual basis. It does get differentially spent through the quarter. This quarter it was 4%, whereas if you would see last quarter it was 5%. But on a 9-monthly basis, we are now at 5% for the full year as far as marketing spend is concerned. So which is where also I was highlighting that one should also very closely look at how the 9 months number look like at early double digits at 10.3%. So and that's literally where we believe that we will build from here on.
Understood that. The second question was that the traffic growth is healthy. To get a sense, would it be fair to say that mainly the value strategy, based on, say, the data you have, is driving majority of these incremental footfalls that are happening? And just one last question to conclude, would be that possible to get a sense of how you would look at the SSG performance, excluding cafe, which has now been in the base for more than a year? Yeah, that'll be it from my side.
Yeah. Nihal, good questions, both of them. We have always maintained a traffic strategy through value, right? If you go back the 8 years of our existence, we have always had a value mechanism always in play, right? So that's just basically the discipline that we have in marketing. We will always have a value, whether it is, in the past we had a 2 for 50 offer, or, now that we have a 99 rupees meal that Kapil spoke about. We will always continuously have a value traffic driving kind of a strategy, right? So that's nothing different than what we did years ago and what we're going to continue doing moving forward, right? Now, as far as the discipline, like, Kapil went through several new product introductions, right? Whether it was the wraps that came in, or the nuggets that he rolled out, the cafe that we rolled out in the past, and so forth, right? All these are product, traffic driving kind of tools, right? Cafe drives in people that add on to traffic, which is not through value. So it's a product traffic driving kind of a mechanism. So those will continue. So it's not that we will only drive traffic through value. That is definitely something that is ingrained in the way we operate. But there is also this new product, NPD as we call it, new product development, which will continue to draw new traffic into the business. Cafe is no different from that. Cafe is a kind of a long term. We think that in the first two, 3 years, we will kind of slowly convert as we, today you see the conversion of people coming into a restaurant who actually buy products like combos and then add a coffee to it. There will be a time in the future that this will be driven predominantly with people just coming in to have a coffee, filling in day parts. So it's a slow kind of improvement that we are kind of putting good energy in terms of operations, making sure that we continue to improve our cutlery, right? Our cups that we are serving this in. The products that we are testing on the food side of our cafe. All these things we continue to do. And we have a good footprint. We have 334 cafes operating right now. And we continue to open all the new restaurants with cafes where we can, right? So this will be a business that will continue to build, but traffic will be driven by day parts, which is our strategy bringing in NPD, and it will also be driven through value. So both these things, I don't know, Kapil, if you want to add anything.
It's pretty much on point. Value will continue to be a key driver as a mass media communication, out-of-store communication. But there will be a lot of these new product introductions that we'll see over time, which help us build, more trials and more traffic into the stores on the back of NPD.
Okay. Next question.
Yeah, just start on the SSG X of cafe if possible.
So Nihal, on that, principally, if you will see now, coffee has been operating for a while now. So from an SSG perspective, has coffee been an outperformer, underperformer? It's been in line with the overall SSG that we've done. If your question is more towards 16 versus 14 that you see, that has a lot to do with the new cafes that came up during the quarter, which took this down.
Understood, sir. Thank you so much.
Thank you very much. The next question is from the line of Dwanil Desai from Turtle Capital. Please go ahead.
Hi, good evening, everyone. So my question is that we have revised our guidance on SSSG from 6% to 3%. So if you can elaborate since last call, what has changed? What are the assumptions which we made at that point in time? And what has changed, for us to kind of now go back to 3%? If you can talk a bit about that.
Right, Dwanil. Essentially, every time we come every quarter, we kind of guide basis what we expect the business to do versus what we expect, where the industry is going to trend from. And one of the things that RBA we have done is been very transparent with our investor fraternity and share what we feel at that point of time. As you would notice that the industry is currently going through its share of tailwinds, and the outperformance at RBA continues from our standpoint. But at the same time, because if you look at your October, November, December, where we had hoped to do a much better SSSG that did not turn up, I thought it was important to communicate that to our investor fraternity.
Okay. So, kind of a, follow-up on that is that we are expecting FY25, 8% FSSG. So are we baking in a much better market environment, and in case if, this kind of a headwinds continue, is there a risk to downside revision to that number?
So, no, Dwanil. Dwanil, we are not saying my FY25 guidance will be 8%. What we are saying is our long-term guidance, given that the country is going to grow at 6 to 7%, we believe 8% is a fair assumption from a country perspective. However, if the headwind continues, which we will only come to know by the end of next quarter, we will come back and give you the guidance for 25. As of now, we are not guiding anything on 25. This is a broader overall long-term guidance.
Okay, got it. Second question is on Indonesia. So I think, when we acquired Indonesia business,